Hey guys, Mike here. So the start of a new month happened yesterday. Obviously wrapped up July, another huge month for July, one of the most bullish months out there next to November really. So here we are in August, September. We're going to get to see, let me know in the comments if you think we're going to continue to try to run this up for the month of August. And then of course September is usually worse than August and one of the worst months. So we'll see. This is going to be a fun time. And clearly you can see the winners and losers out of this AI race. That is for sure. No doubt about that. We are going to get to your questions about stocks like, UNH, ENPH, Adobe, and I'll show you what I'm talking about. I'll say you can clearly see the winners as far as like where money's flowing with these AI winners and losers. There's no ifs, ands, or buts about it. You can just see it, especially on these earnings. A couple other stocks as well you guys asked about, as well as how to identify breakouts or possible breakouts. And then also liquidity in the market. Where is it at? Because there is something going on behind the scenes. Like I told you, the government, well prepared, right? They already know how to keep pushing the market up and make sure it doesn't fall by dealing with the bond market, okay? And so in the U.S., we don't just depend on foreign countries, and I think they kind of saw this coming. Hey, what if foreign countries or governments stop buying as much debt? Well, don't worry, we'll buy our own debt. That's the way it works. So let's get right into it, guys. Please let me know if you have any more questions. Feel free to participate as well. And you can see the first one here says, any updates on liquidity for the market to continue to pump on? Seems like the Treasury is ready to take the Fed spot from what I am reading. Very good. I'm glad you actually saw that. And the Treasury did come out with this just the other day about they're going to ramp up buybacks. Okay, usually you think of the Fed doing this. Remember, they're still rolling off their balance sheet. And so the Treasury announced it will double the frequency of long end nominal buybacks and increase the size of cash management buybacks, all aimed at improving liquidity in the market. This change to buybacks will take effect August 13th. So what they're trying to do is control the long end of the curve. That's what you always hear that, like once the yield curve inverts, we go into recession, all that fun stuff. But so this is what they're trying to do. And again, at some point in time, if things get bad, the Fed will participate in this as well. But right now, and that's why they've been cutting back a lot on their Fed balance sheet roll-off, okay? CTAs, we talked about this level right here. They've now eclipsed that level. And so and remember, they're not trendsetters, right? They're trend followers. And you can see this clearly by the bottom, right? I mean, they didn't even get out of their shorts until we were well into this move up, well into the move up, okay? I mean, so that kind of lets you know they're not trend setters, they're trend followers, and it may take them a while to get into that trend. So if the market continues to grind, they're going to have to continue to buy. That's just kind of the way it is. Looser financial conditions right here. We already talked about this. I give it every morning or every week, to the members. The National Financial Condition Index loosening, right? Continues getting looser and looser and looser. And of course, when this is going down, the market is going up. When this is tightening, the market's going down, so it doesn't like it. So you can see through any bull run we've ever had, this is what you'll see, this thing just falling off a cliff because the conditions are getting looser and looser when it comes to risk and things like that. And of course, this is why you're seeing no volatility in the bond market, right? We're sitting down here, we're at a level which we're still waiting to see if we fall back through. But as the move index, you can put a SPY of the S&P over this. As it's coming down, market's going up, it's going up, market's coming down. But this is why you're not seeing any issues with the bond market so far. And so that's a good thing for a bull run. Hopefully that helps. Now, next one says, my question for Saturday, as you know, everybody has a different trading strategy in the market. I was curious if you could break down your strategy on risk management and confluences to choose which stocks you get into, what positions and futures you like to see before entering. Thanks, Mike. Appreciate your channel. Kind of goes along with this one from Jeffrey. He says, what are the signs or signals that show that there's going to possibly be a breakout before it happens? And so when I'm looking at stocks, for example, the other day, I put this on SPY on Wednesday night's video, and I said, man, what a great setup, because we were gapping up big time. And, I love fibs, I love imbalances, and I love when they have a confluence with an actual level of interest, right? So you got three things going on there. And you can see this was like the perfect setup, which I took. And so, got a nice level. I got this inverted fair value gap. And then I also had the fibs, okay? So we came down, and you can see as it was coming down, it was respecting the fibs to the penny, just bouncing to the penny. And what happened? That golden pocket, once again, to the penny. So if you're going in zero DT options, the futures, things like that, I mean, you did really well right here, which I was happy about, for sure. I was looking for that box to actually get filled up there as a target. But either way, that's the kind of stuff I'm looking at when it comes to that, whether it's on the S&P, whether it's on the ES, whatever it is. When it comes to stocks, like trade desk is one you guys kept asking me about. So when I looked at it, I like to bring up the visible range volume profile. I like risk reward to say, okay, you can see it got listed. I knew it was going to sell down because it got listed. Once it gets listed, they'll come down some. There's a gap there, filled 50% of the gap, and then took off, right? So it's good risk reward. You can see where to set your stop loss at. Love these kind of patterns here where it's just bouncing, getting rejected, bouncing, getting rejected, especially for like a year or two. Because when it breaks above, it's going to be a really, really nice move. And we talked about this one forever. And so it's been a really nice explosive move out. You saw this in Apple a couple times. And, with these kind of patterns here, they can break up or down. Okay. And so, but when you see it just start hitting that trend line over and over and over, and it's going to be a big move out of it. It's like kicking the door multiple times, right? Like Tesla, look, I don't know which way this thing's going to go because it is Tesla, but when it does break out, like you've seen this many times before on Tesla, it will be a big move. Okay, that's usually the way it works here. All right, but it's just continue to wedge and compress, and that's what makes the move higher. So this is the kind of setups I like to see. And on the sell, remember we came down on earnings. What we do, we hit a trend line, hit that imbalance, big bounce. Okay, so that right there is what I like to see when I'm doing this in the stocks and stuff. It's good risk reward to me. And then when I look over here at bull, right, a rounding bottom. We saw this pattern play out many times. Rounding bottom, there's that downward trend line. It's hitting it for over a year basically. And I was like, man, watch this thing's going to explode out of here when it gets up here. And that's what happened. So you have that rounding bottom. You can call that a handle if you like, up and handle, boom. Explosive move up. You've seen that on HIMS many times. Here's HIMS over there. We talked about this again. That pattern right there. And again, don't worry about the names, the patterns, just recognize them. But it had this trend line where it's just bouncing, it's grinding, it's weakening it down. There's a gap right above. There are levels to be had right there. And so here comes the explosive move. And I love it when there's a gap above because if I pull the visible range volume profile up, it's going to go through this very quickly. That's why I like to pull that up so many times to show you like where the resistance is, where there's no resistance, that kind of stuff. And if you see a stock setting higher lows, but it's not setting higher highs, so it keeps hitting that same level over and over, but it's setting higher lows, it's getting ready for an explosive move. So that's just a couple in there. And you can obviously put your moving average in there when we break above a 200, break above the 50, all that's bullish as well. All that's bullish as well. So I kind of like to see that when it comes to confluence. I hope that helps. Let me know how you guys do it. Now, next comes from Dr. Marcus. He says, question for Saturday's video, which stock chart is more miserable to watch for an investor, UNH or ENPH? Depending on which one you're in, but it's got to be ENPH, depending on when you got into it. Reason why, because it's down like 92% from the top, and UNH ain't quite reached that yet. It definitely could if it gets below 200. But yeah, this one's, and plus with ENPH, you're kind of at the mercy, as you've seen, at the government, right? And so, because, it's all about the subsidies and everything else, because alternative energy, all that fun stuff. And so that one's been a mess. And like I told people, I said so many times, do not touch this thing until it gets above that 50 moving average and closes above the 50 moving average convincingly. Don't do it. And so far, that's been the play. Now, looking at this one for a real quick here, watch out for that 30 area. And the reason why I say that, because when you start scrolling over, you got to go way back over. Okay, you got to go back in the 2020 time frame. What do you see? There's an imbalance. There's a gap down there. Obviously, a level of interest where we've seen bounces before. So when we pull it back over, it's this shaded box right here, which it's in. Each time it comes in that shaded box, it bounces. It's a short-term bounce. But watch that area around the 30 area. But again, this is just one of those ones. It's so dependent on government subsidies and so sensitive to what they're going to say and everything else. So got to be careful. Okay, got to be careful. And so like with this one, for example, I don't know where it's going to do for the next 2 or 3 years, but you can guarantee if a Democrat gets in, next time this thing's going to move, because what are they going to do? They're going to come out with subsidies and plans and everything for alternative energy. Now UNH is another frustrating for people, but it ain't down 92%. It's down a lot. Okay. The other thing with insurance companies is they're usually cash cows, and the way our system is, because it's for profit and everything, they're so embedded. This is the larger one, but you saw with Humana, right? Got below its 2020, had earnings, nice pop up on it. This one hasn't reached below 2020, and so that's why people, when they hear you say, "Wow, there's no way that thing's going to break the 2020 low," and you're like, "Really? Did you look at the other insurance companies? Most of them have already broke 2020 lows. Some of them are going back to like 2014, 2015." And I promise you, and again, good runs here, right? But I promise you, see, if you ask Humana shareholders, hey, do you think your stock is going to break 2020 low? They would have said, heck no. Well, guess what? That's what it did. So it's already broke the 2020 low, and then it reported earnings. So again, these, it's not just healthcare either, by the way. It's like property insurance, everything, just getting blasted, right? I mean, you look at CNC, same thing. I mean, that thing's trading down at like 2014 levels, right? So yes, the industry as a whole, it's not just United Healthcare, it is the industry as a whole until they figure out these reimbursements. The funny thing is, for 2026, the budget puts them in from the government, they're going to get reimbursed even more for their Medicare patients. It's just Medicaid they're trying to figure out, because that's going to be a mess. A lot of people will be coming off of it. And so it's just something they got to figure out. But again, it's greed. They'll figure it out. Now, the next one, I already answered UNH, but Nvidia, it says, how high do you see it going over the next year? I mean, a year out is a long way, and this is one of the AI kings, right? The funny thing is, when you put Oracle over it, because that was the king during the dot-com bubble, like Nvidia has already outdone it. All right, it took a little bit longer. But the other thing you see too with Nvidia's chart, look at Oracle. It's basically straight up. There was really it's not a lot of supports there against the weekly chart. You can see some supports on Nvidia, and Nvidia is actually very profitable, growing like crazy, unlike those dot-com bubbles. Okay, so it's just a big, big difference when you look at this. Okay, in the dot-com, people were just slapping .com on the name of company, and it was going to the moon. And so that's why they came crashing down so hard. There's a lot of companies like that now, but Nvidia is not one of them. Okay, and so you're seeing that, right? I call them the 4 horsemen. I might trade it out to the 6 horsemen at this point in time that I was telling members about. But again, you know, it's flying. And so when you look at the fib levels in this thing, depending on what happens on earnings, because it's going to be hard for 50%, I think it's like 50% growth or something like every quarter. They're just putting these insane numbers out, which you will rarely ever see of any company, right? But you can see the fibs, and don't be surprised, you know, by year end we're above 200, assuming the market continues to go, right? That's the big thing on this. But you got 220, 230, 240 on the next fib levels up. And again, a lot of people say that can't happen. Maybe not. I can't predict what they're going to do, right? The problem with Nvidia too is what keeps happening. This political crap where, oh, we're going to restrict China, we're going to restrict this company and or this country. And so that's another thing, okay? But again, they're the number one. They're the big dog out there for now, okay? And they are profitable, and they keep generating it. So, you know, people keep betting against it. And again, it's not immune to big pullbacks, right? And so far, those have been buying opportunities. So that's what I got to say about Nvidia. Now, next it says, when is the RTY, RUT, IWM going to make their move? I know most of it's related to rate cuts, but others seem to be doing just fine without them. So when is it this index or ETF's turn? Well, the thing about that is, yes, this is the most sensitive when it comes to rate cuts, right? We know we're definitely not going to get one now or August, and so September is going to be the first one. But remember, it's consolidating right now. These are the most sensitive. We're going through earnings season where a lot of these are unprofitable companies, okay? So it's nothing you got to keep in mind. When you look at rate cuts, here's when they did the 2 rate cuts right there. It was a big move up. It was volatile, but it was a big move up. And it's not about the rate cut per se. It's about the level we're at. We are at a very high level, you know, over the last 15 years when you compare it to it. If you go back to the 90s, early 2000s, these rates are nothing. But again, we're in a different time, right? And so here they did rate cuts. Guess what? They didn't do anything. Okay, so just keep that in mind. So again, if they're doing rate cuts while the economy is good and the market sees it as that, then you should see IWM go up. That's just the way it should be. If they're doing emergency rate cuts, that's a whole different ball game. Okay, that's when the market starts to panic, right? They're going, we got to do a rate cut because, oof, things are bad. And so keep that in mind. Again, I can't predict, you know, the economy stuff. I mean, you know, there's 2 different economies going on right now. And so, yes, if they do the rate cuts like they did 2 years ago, where it's just 0.25, 0.25, it's scheduled out, doesn't surprise anybody. Yes, IWM should benefit from that. Right now, it's just kind of trying to ride this 20 up right here. And so consolidating. So either way, it's going to be a big move up or down because of this consolidation. I've showed you this in the past, right? When it comes to Russell 2000, and you see up ahead, there's not a lot of what? Resistance above, right? That's the easiest path. But also, if we break that level, you can see right there, I've been talking about forever, where we're heading to. We're heading down to those white trend lines, or white support lines, excuse me, down below if that breaks. And so we'll see how earnings hold up for this one. Again, it's not like NASDAQ where it has these heavy weights at the top. Everything's kind of equally weighted. It's not perfectly weighted, but there's no 1 or 2 stocks that are accounting for 10, 20% of IWM. Okay, so you can see those levels. And so yes, this is the most frustrating one for sure. And so I would say this: if the Dow is going to go up, if the equal weight ETFs start to move up to all-time highs, you might see the Russell get dragged right up with it. And when you look at like the RSI, the momentum indicators in this thing, which some I like to look at too, you can kind of see like it's stalled out right now, but they're above 0, they're above the 50. You look at the weekly, right? RSI is above the 50. That MACD is starting to come across with both lines now above that 0 line. So watch that closely. Okay, if that continues, it's most likely going to move up. Now Adobe here, it says, what are your thoughts on Adobe? Is it a red flag? They haven't been going up with the retest of the market. Yeah, it's a red flag because, again, you can just look this up. I use AI to look this up, and I knew right away, why is it going up? Because they're concerned about AI monetization and competition, right? Missed revenue targets, missed guidance. And so winners are being chosen right now, and people are like, why throw money at these other ones when right now, there's AI winners clearly that are actually monetizing AI on both sides. They're able to lay people off, get AI to take their jobs, and making revenue on it. That's what Microsoft's doing. And you can see Adobe broke that trend line right here. Obviously just like a falling knife right now, hitting these fibs on the way down right here. Could be at a level where you're like, okay, yeah, I mean, this is a bounce point for sure, right? That's so far on the weekly is a higher low right there. Okay, so we'll get to see if this is, because I mean, Adobe's been around a while, right? It's a big dog. So, we'll see if it's going to hold here. It's bounced where it needs to bounce. When we bring up the visible range volume profile, you can see it's setting resistance, but if it gets above there, 436 in the cards. I mean, that's just the way it is, okay? If it falls down, you can see there's some tree limbs below right there for it to fall down. So you got to start putting together some good earnings calls. Got to start showing that you're putting in the AI work, investing in it, actually making it worthwhile. And you can see, like, you get Microsoft. Remember, they do two totally different things, but that is an AI winner. That is clear. Because remember, look at the charts. They used to go hand in hand. Look at that. 2020, 2021, 2022, and all of a sudden, you got even in 2023, they were moving hand in hand. But when 2024 came, Microsoft said, we are ramping up AI like crazy. We are doing layoffs with AI. And we're going to generate revenue AI, and Adobe didn't, and bam, big difference. Again, I know they're in two different areas. I get that part, but I'm trying to show you. I can show you many stocks like this, by the way, when you lay over this, and so that's the difference. And so it's kind of like Apple, right? Where Apple's like, we've fumbled the ball on AI, that's for sure, and so they're getting punished. So that's where we're at with that one right now. Last one here from Harold says, I would be grateful if you can take a look at Sezzle, Sezzl. This one right here, as soon as I saw this right here, and by the way, Harold, if you've been in this thing for the whole, 13,000% ride up in like, I don't know, a year and a half or something, congratulations to you. I knew immediately this was a low float stock, and boy is it. This is what I'm talking about. This is the kind of Russell stocks you get. This is on the Russell, 16 million for the float, 20% short interest. Woo! And so this one, it moves big time in both directions. This trend line you can clearly see was support, now it's resistance at this point in time. When this thing moves down, I'll show you, it moves down a lot. All right, you can clearly see where support is if this thing decides to come back down right here. I think that's like a 67% move. If we look at that, yeah, 67% move in a very short amount of time, just FYI. So it can move. Yeah, that is a 67% move. And so when it moves down, oh yeah, but that area there, you can see if it does happen to come down, will be an area of interest. Is a high risk stock, okay? But that will put you in, obviously, what I like to do with the fibs, okay? You can go, just from the last swing low right there. 0.79 fib is right there inside that imbalance, inside where you would see support. If it did come down, and that would be a big drop down, okay? But what are we in? August, September, right? If the market shows weakness, this is going to show the most weakness and come down, okay? If you're moving up, you're just looking to break above that trend line is what you want to see. Again, the moving averages, you can pull them up. Doesn't really help with a 2-year-old stock, but it's above the 50 right now if you want to look at it that way. When you pull up the visible range and volume profile, you can clearly see where support is right down there in that box. You see why it can fall down so fast. That is why if it breaks that, it's another gap down below. And so, but this one does have growing revenue, but the main reason it moves so fast and so hard is because it's just a very highly shorted stock with a very low float, okay? And you can see the revenue. They were growing year by year, but this is one of those buy now, pay later type of stocks. And so it's like an Upstart, right? Upstart has much bigger moves than all the rest of the fintech stocks like a SoFi or a Hood or any of the rest of them. And so then it moves like it does because it has a low float and it's highly shorted. So just be careful with it. Congratulations, you made the moves. It comes down. That is your area to look to rebuy if you really like this one. And so hopefully you guys got something out of that. Hope you guys have a great weekend. Please hit the like, subscribe button if you got something out of it. I really appreciate it. Thank you for sharing the video. Thank you for signing up for the membership. Less than McDonald's combo at $7.99. That's everything you get with it. Just hit the link down at the bottom of the description. And I'll see you guys later.